March 12th, 2025. Bank of Canada rate cut number 7, Jamie.
Spring is here, Denny. They greeted us with another rate cut.
7 in a row. So we've now seen 2.25% rate cuts since June 2024. Less than a year, 2.25%. That is bringing the overnight rate down to 2.75, which means banks will adjust their prime rate down to 5% in the coming days, and your variable rate mortgage is continuing to fall.
Congrats, variable rate mortgage holders. You know, if you're a fixed payment variable rate holder, your amortization just went down a little bit.
Yeah.
But for anyone that's holding a variable rate, a little bit of a win today. For those that are trying to qualify for purchasing something new, might help your affordability moving forward, but it's still uncertain times. And I don't know how banks are treating risk nowadays with what's going on in the world, but I would imagine any sort of rate cut is going to help our real estate market a little. But we're kind of being overshadowed. I think this rate cut's being a little overshadowed by other headlines in the news. You know, a lot of talk of uncertainty with tariffs and the economy, upcoming election. Hard to say if this will actually have much of an impact or it's a measurable one.
It does seem like the last handful of rate cuts were bigger deals, and this one now is just fitting into this craziness that we are living in 2025.
It is a little crazy.
So many things happening at the same time.
Absolutely.
If you're you are a variable rate holder, but if you are young family out there, you have one mortgage on your primary residence, you're a variable rate holder, how would you describe the emotional roller coaster of these last 2 years?
Oh, geez. Well, I think there's probably a little relief right now,
Yeah,
but there was probably a lot of people were sweating. I mean, if you put yourself in the shoes of like 12 months ago, I think we were talking about expecting rate cuts to already happen. And they didn't. I mean, the first rate cut was June 2024?
Yeah.
So I remember there being a big period there, probably a year leading up to that June, where it's like, are they going to cut? Are they going to do something? And it just didn't happen. It held off. So, I mean, all in all, I think there's a little bit of relief. I think it'll be interesting to see where they go moving forward because, it's hard to predict what's going to happen in this day and age right now. You know, we have hard to say how this tariff's going to unfold, hard to say how our election's going to unfold. And, I imagine the bank rate's going to kind of adjust based on what's going on. But I do feel that there's probably a decent probability of inflation happening at some point, which if they ever do hike a rate, that will definitely throw a wrench in the market. And that could happen around the corner. I just don't see that happening this spring. Probably a 6-month, 12-month year from now problem. But boy, would that cause a wrench, Denny, if we saw a rate hike instead of a decrease.
Jamie, you're giving people panic right now. Stop.
Okay,
abort.
All right, let's talk about positive things. Overall, optimism. Like, I mean, if we were going back, say 6 months ago or in June, and we knew there was going to be this many rate cuts, we would have assumed that this spring would be a screaming busy spring.
Totally.
You know, we would assume a lot of pent up demand, and we're not necessarily seeing it yet. Mm-hmm. It is still a slow market. We may not have the spring we've seen in the past. Spring break's coming up. April's the month that's going to tell us a lot. If April's a bit of a flop, I think this market's going to just have a delayed year. There might be just a smaller, as you said, spring window. It might be a May or June where all the families decide to move to get settled before the next school year. And just might be one of those years of uncertainty until we get a little more stability and certainty with our own government and trade. And
that's the thing. It's kind of moved from the unpredictability being caused by interest rates over the last couple of years. Now it's moved to the political landscape in North America. And it seems like those details are changing almost daily. And it's so hard to keep up as I probably pay attention more than most regular consumers out there because it affects our career and our job and the conversations that we have with clients on a daily basis. And I find it extremely hard to keep up. It's really, really difficult to give people advice or even share strategy conversations with people if they're talking, 30 days out. Because there's a lot that probably is going to change from now until the middle of April to the middle of May to the middle of June. We might have a federal election in that timeline too. And it's very challenging to give people advice, to have those conversations right now, even though interest rates are plummeting.
What would you say? Like, I don't think anyone should react to make their decision on purchasing real estate based on each rate announcement. What is your, what are you saying to a buyer right now that doesn't have to buy? Is this a good time to buy? And maybe it's a condo, maybe it's a single family home. What does this rate cut in the current market landscape tell you, or what kind of conversations are you having with a buyer right now?
We're going to share some stats in our next podcast around that's going to help me answer that question a little more. So I'll just quickly summarize. But overall, inventory is significantly higher this year than it was last year this time of year. So as a buyer, you have a lot more options, and you likely have a lot more freedom to negotiate, to write longer subjects in your offer, even potentially writing subject to sales right now, because the amount of inventory and the number of product units, homes that are on market 30, 60, 90 plus days. So if you're looking long-term, you're looking to buy a home that you or your family is going to live in 5+ years, I think it is a really good time to buy. I think there's so much uncertainty that so many people are sitting on the fence, and that may change in 3 months' time. It may be very similar to what it is today, but it's probably going to look more competitive in 12 months' time from now.
I think this is more than ever a market where there is so many different mini markets going on in the Lower Mainland, and some of them are moving completely opposite directions. There's no prices are flat, prices are up 5%. There's no consistent summary that encompasses all areas and all product types. Yeah. Condos in Burnaby are doing different than houses in Langley, and houses in Langley, or townhouses in Langley are doing different than townhouses in North Van. So, I think one overall trend is that there are a lot of price points and property types, whether it's that first-time one-bedroom condo buyer or entry-level townhouse or entry-level home, that are not struggling, that are more of a balanced market, that are short on supply and high on demand. And there are a lot of areas around this city that have oversaturation of listings. So I think, for example, condos in, say, the Fraser Valley are expensive, brand new condos in Burnaby. There's just a lot of them in the higher price points. And high-end single-family homes. So all in all, like a bank rate cut of 0.25% is a step in the right direction for the market to improve. But I think there's a lot of property segments that probably going to be flat for the next 12 months or showing signs of no gain. And then there's others that if they're busy with all this certainty, because we're still running into the occasional multiple offer, what are they going to do in 12 months from now when things normalize? I think they could be up 10, 20%, some of these property types. They don't, there's a fixed supply of certain homes in Vancouver. They don't make a lot of family homes right now. So if you're looking, say, North Shore, 1.2 million for a townhouse, or that price point for any townhouse in Burnaby or Port Moody, it's going to catch a lot of eyes. Any other closing thoughts with the latest announcement, Denny?
I think interesting to just bring up a couple recent changes too. Taxes being one of them.
And we'll get into that.
We'll maybe share a bunch of some changes that have happened recently and outline all the taxes that have come into play. And it is more than you think over the last 9 years in BC and in Canada. But one interesting one, this is not really affecting real estate value in the area, but District of North Van, when the provincial government came in with Air BnB ban a couple of years ago, some municipalities went very hard and disallowed Airbnb altogether. And District of North Van was one of those, and they've since pulled back, basically re-allowing what the province is allowing, which is Airbnbs on your principal residence, secondary suites, coach homes, etc., if it is your primary residence. So District of North Van is now allowing people to register for business licenses to run these Airbnbs out of their primary residence. Just more a topic of interest than anything else.
And as I mentioned, District North Van is now giving their soccer field highlights no longer on X or Twitter because of Elon Musk. They've decided that platform's not for them because of how crazy this world is. So I don't know. When we live in a world where a district announces that they're not giving soccer field announcements on a certain platform because of the news, it's a bit crazy. But going into the taxes, I mean, the reason why we're bringing it up is 2016, 9 years ago now, that was a that was a bit of a memorable market. A lot of little segments of Vancouver just went. We had a lot of foreign buyers that were in the headlines. We didn't see a lot of foreign buyers ourselves, but we got the trickle down effect, and it was definitely felt in our market. And prices in some areas just skyrocketed. And in certain areas, we haven't seen 2016 prices to date. So there's some areas, some parts of the city that have been flat for 9 years or even down in the last 9 years. And kind of looking at some potential reasons why, and it's, taxes are a big part of it. So like kind of listing them off, there's like 8 or 9 tax changes or new taxes that have come in that time, provincially, federally, even City of Vancouver with the empty homes tax. But just to give you just to list off a few, in 2016, they introduced the 15% foreign buyer tax. Then they upped it in 2018 to 20%. I think the 15%, I remember us talking about that at that time, 15% achieved the goal. And I think if we were looking at that then, going from 0 to 15 was a big jump. And even a 5% or 10% foreign buyer tax would have discouraged investment. But 15 was what they went with, which did check that market. And they increased it to 20%, which probably did nothing. And then they went with a full-on ban. That was, I guess, federally. Property transfer tax. In 2016, they introduced a 3% rate for $2 million above. So it used to just be 1% of the first 200,000, 2% of the balance thereafter, ongoing. But new luxury segment, above $2 million, 3%. And then in 2018, they had above $2 million, 3%. And in 2018, they introduced 5% above $3 million. So if you have a property assessed at $4 million per se, you're paying a lot of property transfer tax because that last million is at 5%, which is $50,000. Speculation and vacancy tax introduced in 2018, 2% for foreign buyers or families and 0.5% for Canadians. And Denny, you just mentioned it's getting upped.
As of 2026, that is increasing to 3% for the way they qualified is for foreigners and untaxed worldwide earners, and up to 1% for Canadian residents. So if you own a secondary property, I used the example before we started the podcast of like a lakefront property in Kelowna that your family's been using for years as a summer vacation home, you are now paying a 1% tax on that if it is not occupied for 6 months of the year. A 1% yearly tax. So let's say that property's worth $2 million now. That's a $20,000 tax every year.
Yeah. And Kelowna is a big city where someone might argue, hey, it's probably not a summer family home anymore, but this applies to Penticton. It applies to, Naramata. I get big congrats. I got some news that Predator Ridge got exempt from this tax. So you can have a recreation property in Predator Ridge, Vernon, and they're no longer accustomed to this speculation.
Why do you think that is?
Well, 45 minutes outside of Vernon, golf community. It's all new development. They really need to encourage people buying it in order for it to get developed. So I think they just fought their butts off, is my guess, to try to get an exemption.
My thought was one of the politicians owns a property there. So boom,
well,
exempt.
You might not be wrong, but I also think there's a lot of older people in Predator Ridge that have a lot of excess time. It's got that like pickleball ferociousness over there. They if they want it, they get it. And I'm sure the government officials doesn't have time to listen to the complaints. But nonetheless, I do think like communities like Predator Ridge should be exempt because one, this is one small community in BC, but it's like, a third developed from what the full plan is, and they need to have development to keep building out the community. So otherwise it's just an unfinished parcel of land. So anywho, I hope other communities in the Okanagan and these smaller areas follow suit. Denny, what else do we have?
I think that's it.
I didn't go through all the taxes.
Okay.
So just a couple more. Just additional school tax for homes over $3 million. It's a small 0.2%, and then 0.4% over $4 million. Underused federal taxes, underused housing tax, GST on assignment sales. So full 5% GST applied to the profit on an assignment sale. Flipping rule tax if you flip with less than 12 months. Those are federal, and then obviously the foreign buyer ban. And then for Vancouver, we have the empty homes tax. A lot of taxes since 2016. A lot of people hard at work. Man. Creating money. Any closing comments, Denny? We got a lot of taxes. We got a new BOC rate. We got a spring market that's struggling to lift off.
Our next podcast is going to be, should you invest in real estate right now? And so we'll leave that one open-ended a little bit. So you tune into the next one. But I mean, tax on tax on tax on tax on tax is not necessarily incentivizing people to invest in real estate right now. So that'll be an interesting one. I think maybe let's just end with the reminder that with this new Bank of Canada rate cut, if you are a variable rate mortgage holder, your payment is going to go down roughly $15 every $100K of mortgage that you have. So if you have a $500,000 mortgage, your payment will likely go down roughly $75 in the next couple of weeks.
Congrats.
Congratulations. Yeah. We're doing that a lot recently.